Hi, I'm Nicholas Yeo, Head of Equities, China. China has the world's second largest economy and second largest stock market with a market capitalization above $10 trillion. Yet, A shares account for just 0.6% of the MSCI All Countries World Index. In the past, China's onshore equity market was hard for global investors to access, but it has opened up and liberalized considerably in recent years. To highlight, China's world-leading equities rally in 2020 was driven by both domestic and foreign investors. Since 2014, A shares have attracted over $180 billion in net inflows from overseas. The answer is growth. China's economy is increasingly self-reliant, its fortune closely tied to domestic factors, namely Chinese consumers. Its capital markets have continued to function well despite COVID-19 and geopolitical tensions. Domestic tourism has rebounded, while domestic consumption at the premium end is holding up well. This earlier economic restart affords investors greater clarity on the outlook for Chinese companies' earnings. Of course, one unknown remains how US-China tensions will evolve from here. If we see continued US-led moves to restrict Chinese access to technology, that could slow China's economic catch-up. Yet, China's assertiveness in managing tensions with the US is underpinned by changes to its economic model. It is becoming far more self-reliant, its fortunes driven more by domestic factors, namely the burgeoning Chinese consumer. Despite the vagaries of geopolitics, we remain constructive as our stock selection is more driven by domestic economy and is thus more insulated from any potential adverse effects. The domestic orientation of our Chinese equity portfolios is an attribute that differentiates Aberdeen Standard Investments from many of our peers. Today, Chinese companies are engaging with asset managers more closely than ever. Increasingly, they are aware of their carbon footprint and realizing that by implementing sustainable practices, they can improve brand perception, customer loyalty, and ultimately share price. They are also engaging on social factors such as how they interact with employees, vendors, and society. Firms able to showcase how they safeguard customer data, prioritize environmental sustainability, foster a good staff culture, and maintain standards among their supply chain will resonate with customers. That will drive profitability and consequently investor interest. From our perspective, taking the time to identify China's ESG outperformers should enhance risk-adjusted returns. This is why we think Chinese equities should play a part in global investors' portfolios.